Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is Monday, June 24th. We're going to take a look at Qualcomm. This is out of the information technology sector, the chip sector in general, and that's what this company is out of the chip sector. Seemed like it was hit pretty hard today. A lot of companies down, so I just picked one. I think we've done a video on Qualcomm actually this year, so this will be a recap to see how well the company is shaping up from that previous video we did earlier in the year. Let's get into it. Before we get too far in the video, if you would do me a favor and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. We focus on dividend growth investing on this channel. And make sure you ring the notification bell so you are notified whenever we put out any new content. I do this series, the Stock Pick of the Day series, Monday through Thursday on days that the market is open. We pull a stock out that is pulled back on the day to see if it's presenting any value. I also do subscriber requests. And for some of you newer subscribers, if a company is not a dividend growth paying company, I will not cover it. So I know I've got a couple of suggestions in the inbox right now for companies that are not dividend companies. I won't be covering those, but the other ones that you did recommend, I definitely will get those into the rotation. So again, make sure the notification bell is clicked so that you're notified whenever we put out any new content and those videos come out. And drop a comment down below. Let me know what do you think of the videos, what you think of Qualcomm. Is it in your portfolio, or do you own other companies like Qualcomm in the chip sector? Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in investing. Thousands of stocks out there. This is a good way to give me a front end screener to see if I'm interested in doing more of a deep dive. This is also how I check on companies that are in my portfolio currently to see if they are still meeting the criteria. And it's also how I set up these videos. So we're going to run through this screener on this company, Qualcomm, and then we'll see how it stacks up. If it meets 5 of 8 or 6 of 9, if it was a financial company like a bank or an insurance company, I use price to book. Now, you can use price to book for any company, but when you're looking at a company outside of banks or outside of insurance companies, don't just use one as fair value. Compare them to other companies in the same sector, in the same industry. So for Qualcomm, for example, you might compare their price to book to something like Intel, Broadcom, NVIDIA, some of those companies out there that are in the same sector and in the same industry. Now back to Qualcomm. If you want to know more about them, check them out at www.qualcomm.com. That is www.qualcomm.com. That is their homepage where I pull this information from. Qualcomm is enabling a world where everyone and everything can be intelligently connected. The Internet of Things, so to speak. You interact with products and technologies made possible by Qualcomm every day, including 5G-enabled smartphones that double as pro-level cameras and gaming devices, smarter vehicles in cities, and the technology behind the smart connected factories that manufactured your latest purchase. Our powerful connectivity solutions keep you connected even in remote areas. Qualcomm 5G and AI innovations. AI, that's the new buzzword there, right? Just like all the buzzwords that came before, it's what everyone is running to. 5G was the buzzword for a long time. Now it's AI. Before that, it was, computers, the .com buzzwords back in the day, blockchain for all the people out there who were running to the digital currencies, right? That was the buzzword for the longest time. AI is just the most recent buzzword, right? Are the power behind the connected intelligent edge. You'll find our technologies behind and inside the innovations that deliver significant value across multiple industries and to billions of people every day. And as you can see, again, chip manufacturer primarily, but they do have their hand in a lot of different sectors: mobile phones, smartphones, laptops, XR, VR sets, wearables, so your, Apple watches, stuff like that. Other companies have their own watches now. Automotive, audio, cameras, smart homes, Internet of Things, right? The Internet of Things, anything that's connected to the Internet now. Might even be some of the stuff in your house now. People getting fridges that are connected so they can see what's in their refrigerator. People want to be able to control their thermostat from their phone, so they're connecting their homes to their thermostats and stuff to their phones. Same with cars. They want to be able to start their cars or check on their cars from their phone. So everyone's trying to connect everything. I don't necessarily agree with that, but that's just the nature of the world we live in these days and age. Cellular networks and Wi-Fi networks as well. Again, www.qualcomm.com if you want to know more about the company. Now, the reason we're taking a look at them, down 5.5% on the day. Big drop for the day. We are talking about Qualcomm Incorporated, ticker QCOM, out of the information technology sector. This is out of the information technology sector, but it's a computer chip manufacturer primarily. Down a little bit more in the after hours, it looks like. 52-week range as low as $104.33, as high as $230.63. So even with the 5%, over 5% drop today, it is still much closer to its 52-week high than its 52-week low. Would not be within 15% of a 52-week low. So it wouldn't meet that metric for me. Market cap of $224.137 billion, so they are a large cap company. Beta of 1.30, so more volatile than the overall market. Beta being the market, 1 being market volatility of the market. Anything above that being more volatile, anything below that being less volatile. PE ratio is elevated, $26.78 per share. The market overall is right around 22 to 23. So this is in line with a fast-growing company. So you'd want to know how fast Qualcomm is growing. They seem to be a little overvalued in my opinion, but that's just my opinion. Earnings per share, EPS sitting at $7.50 per share. Earnings date coming up July 30th through August 5th, so sometime in that little window there. Forward dividend is $3.40. They are quarterly payers, so divide by 4, though we will see the per share payout here in a little bit. Dividend yield is low, 1.6%. If you were to wait for them to pull back closer to their 52-week low, you might be able to get this into the close to the 2% range. Ex-dividend date coming up, or actually we're past it. May 30th was the ex-dividend date. Looks like they paid out on June 20th, so you would be in line for the next dividend payout. You would just have to wait a couple months to get it. 1-year target estimate of $181.89 according to Yahoo Finance, so they see this at $284 as overvalued. Now we're going to jump over and look at dividend yield theory. To do that, we look at the 5-year dividend yield average, 2.32%. We compare it to its current 1.6, or over here where it says forward, 1.6, same number. And since it is lower than their 5-year average, that speaks to overvaluation. Dividend yield theory is inversely correlated. The current compared to their 5-year average is lower, so that means overvaluation. Again, inversely correlated. If this number was higher than their 5-year average, that would speak to undervaluation. Payout ratio is low. I like 75% or less, so they're sitting at 42.67%, so that would be a check there. Again, we touched on the ex-dividend date. Now we're going to look at free cash flow. You want growing free cash flow with a company that pays dividends, or any company really, because you want it to be financially sound. And there's a few things that you can do with free cash flow. You can pay down debt, you can make acquisitions, you can reinvest back into the company, you can buy back shares, and you can pay dividends. And typically if a company has growing free cash flow and they're paying a dividend, they have growing dividends to go along with it. And you also want to make sure that they have enough coverage in their free cash flow. That's what this 42.67% is telling you. So it's telling you that of their free cash flow, 42.67% is going towards the dividend. The rest is going back into paying down debt, buying back shares, that sort of thing. So you can see here 2021, $8.6 billion. 2022, a little bit of a drop to $6.8 billion. 2023, back up to $9.8 billion. And so far, this TTM trailing 12 months, which includes part of 2024 numbers and part of 2023 numbers, is 12 point. It gives you kind of a forecast of where they're going to sit at the end of the year. It's not going to be exactly right. You have to wait till 2024 is over to see the exact numbers, but it looks like they're going to be close to about 12 billion. So overall, besides the little blip here in 2022, they are seeing growing free cash flow. They are also repurchasing their own shares pretty aggressively, which I like to see. I like to see companies repurchasing their own shares. They're pulling shares out of the market. Makes you as a shareholder more of an owner of the company, even if you aren't adding to the position, right? So that's good to see. The only thing so far that I don't really like about this is the valuation. Looks like it's a little bit above even the 1-year target estimate Yahoo Finance has, and pretty close to their 52-week high. So I'd like to see this one pull back a bit more. Now jumping over to stockanalysis.com, and I always recommend more than one source. Make sure the information you're getting is accurate and up to date. Sometimes these companies that are reporting this information aren't up to date. They might be a couple months behind, or they just haven't updated yet. And sometimes they are just reporting inaccurate information. It happens. Now they have 24 analysts that have taken a look at this. They call it a consensus buy. Now, if you were to go to stockanalysis.com, you could click on each one of these little wedges and you'd be able to see how many call it a strong sell, a hold, a buy, and a strong buy. So far, of the 24 analysts, the majority must be calling it a buy or a strong buy, then a hold or a sell. Now, they do have a low estimate of $125, which would be a 37.76% decrease from where it currently sits. They have an average estimate of $192.29. That's pretty much in line with what we saw with the Yahoo Finance on the other page. They were about 180. So that would be a 4.26% decrease. And if it happened to hit their high estimate of $270, that would be a 34.44% increase. And you could collect that 1.6% dividend yield along the way. Now we're going to jump into the statistics here. I like to look at return on equity and return on invested capital to see how well the company is reinvesting its cash back into itself. And I like 10% or better on those. So return on equity, 37.4%, much higher than the 10% I look for. And return on invested capital, 20.83%, again, much higher than the 10% I'm looking for there. So check there. EPS growth forecasted at 16.42% over the next 5 years. I like 5% forecast or better. So this beats that by a little over 3 times that. So very good numbers overall. Again, the only thing I really don't like on this one is the current valuation, the current stock price. Now, again, they are a quarterly payer. Payout ratio, they say 45.7. I think Yahoo Finance had it at 46 or 42, whatever it was. Either way, under 50%, so lots of room. Under the 75% I look for, very safe. Dividend growth of 6.56%, so high single digits. 22 years of growth, buyback yield of 0.62%. I don't like it whenever they're in the negative, but they're buying back shares. Sometimes they might be doing that whenever the company's overvalued. That's what that really means. You really want to see that in the positive. That means they're getting good value for their buybacks, but they're buying back shares is the main thing there. And shareholder yield of 1.03%. Now, we're going to look at the dividend history real quick. They do pay out on the March, June, September, December timeframe like most companies do. Going back to December 2021, they were paying 68 cents per share. They raised that up in June 2022 to 75 cents per share, raised it up again May 2023 to 80 cents per share, and the most recent raise here, May 30th, 2024, up to 85 cents. So very nice, consistent dividend growth. Looks like they're about, that was, 7 cents, 5 cents, and then another 5 cents. So, nice, consistent 6.56 or right around their dividend growth. Very nice to see. Now let's run through the screener here. So understand the business. That's where we start. That's why we start with their homepage, right? See, what do they do? How do they make their money? How do they make their revenue? What products do they sell? Really understand the business. If you don't understand the business, you should just walk away right from the get-go, because then you won't be able to tell whenever they are in trouble. Now, again, they are a chip manufacturer. They do have their hands in 5G and some other things out there, the Internet of Things, like I said, so information technology. But primarily chips. Growing free cash flow over the last 4 years. They did have the one blip, but I would say overall, I'd put a check. I wouldn't argue with you if you left that one off. Growing dividend, yes. Dividend payout ratio, much lower than 75%, under 50%, so check there. Dividend yield theory says they're potentially overvalued, so no check there. They are not in my portfolio, so I would not buy them under my cost basis, and they are not within 15% of a 52-week low, so no check there. Return on invested capital and return on equity is equal to or greater than 10%, so check there. And their earnings per share growth was much higher than 5%. It was a little over 16%, so check there. So 1, 2, 3, 4, 5, 6. This would make it onto my watch list with 5 of 8. Even if you were to take out the growing free cash flow and take that check mark out, it would still be 5 of 8, so it would make it onto my watch list regardless. But again, I wouldn't argue with you if you wanted to take that off because of the one down year there. Well, that is really it for this one. Let me know what you think of Qualcomm. Is it in your portfolio? Is it one you're watching? Is it one you're maybe selling, since it is kind of up there on the high side? And chips, I believe, in my opinion, are a little on the high side. They have really had a run. Information technology in general has really had a run over the last 5 to 10 years. It's really exploded. It can't continue forever. That's just the nature of the market. Eventually, there will be a downturn. So maybe this is a time to sell. Maybe this is a time to book some of those profits, or maybe the run is just getting started. I mean, really, let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this one that we may be watching, that we may be avoiding, or that we may be selling out of our portfolios. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like this you'd like me to cover that pays dividends, that's a dividend growth company, that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comments below, and I'll try to work into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any money. Not conclusion. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek lead advice and counsel of a certified financial advisor.